Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Hippo Insurance, Assaf Wand. Always great to chat with you.
Awesome being here. Thanks so much. Looking forward for our chat.
Likewise. Okay, so look, before we get cracking, we're going to learn a little bit more about Hippo. All right, so look, Assaf, you're in Insurtech with a particular focus on homeowners insurance. Is that a fair summary?
Yes, Hippo's, I would say, mission, we call it protecting the joy of homeownership. And our view is that people want to focus when they're at home on basically enjoying life at home and less on being worried about taking care of their house and environment and stuff like that. So we're there to help them take care of their home with everything that it needs, basically be the safety net for everything that might happen to their home, but also help them with services, with devices that help prevention, anything around that stuff. That's what we're focused on.
Okay, and you and I have spoken a number of times pre and post IPO. Since you went public, your stock is down a huge amount, kind of more than 80%. Many other fintechs have also been hammered, to be fair. And I know you're focusing on kind of execution and building the best insurance company that you can. But surely when something like that has happened, it must affect morale, your ability to raise funds, retain and hire talent, and so many other things. So how does it affect you?
Affected us more at the beginning, now a lot less. So let's actually untangle this thing. Let's start with the macro. The entire market is of anything which is growth is significantly down. And I mean, it's not, it used to be it's just Insurtech. And then it's like, no, it's fintech. But now look at what happened with Snapchat, look at Lyft, look at Pinterest, look at Peloton, look at Affirm, I can go through a list, look at Compass, look at Open Door, I can go through this crazy list. The market is down for anything growth around 80%. And the problem is, there's macro trends and a war in Ukraine and an interest rate environment which is uncertain. But a lot of these companies, and us as well, there's just a lot less buyers than sellers. And the cap table hasn't fully aligned. And there's a problem on that side. So that's one. So we're amongst everybody. And when you think about it, it also means that what's the alternative? What's the employees' alternative? What's what everybody's alternative to do? And it's very, very limited. So let's put the alternative. Alternative one was, let's not go public. So I could have had this discussion with you and said, listen, we're worth X billions of dollars because that was the last funding round, which we would have done. But we probably would have had, I don't know, $150, $200 million in the bank and continued business as usual, which basically means that the company would have been at risk. So the valuation would have been happy and everybody's like, that's just the public companies, but the private companies are doing actually well. But that's because they haven't gone to the fundraising. So the fundraising environment now is horrific. If you're a private company and you're trying to raise money, you're probably in a worse position. We'll still have, the stock is down significantly. Our employees actually have liquidity. We give most of them, I'm not talking about the people that before that we actually topped up their position, but they get RSUs, which basically means that when they get their compensation, they get it in a certain lump sum of, your value of what you got is $100,000, and they got it in the shitty price that our stock is now. So there's a lot more upside ahead of them. So that situation, we have close to $800 million in the bank. So our employees know that, it's actually their position, their job, everything is ahead of them, and it's secure and safe. And the other stuff, which is, it's not just about compensation. I truly believe that my job on taking care of employees and retaining the best talent is to make sure that they're doing interesting things, that the mission is interesting, and they're helping hundreds of thousands of people in their time of need. They're working with amazing people, with top talent. It's a meritocratic place, so people that are doing well are actually being promoted and earning more and more. They have no ceiling whatsoever on the level and the responsibilities that they can actually do. And it's a very friendly, positive, fast-moving, smart work environment. So I don't like the situation, but I think if you look at it in a more holistic view, then I think that it's actually one of the better places to get to work. Put aside we're in a world where we can have a discussion, but yeah, people can go to Facebook and Google. Even that is not an option because they actually stopped hiring. So, and Facebook stock is probably 40, 50% down as well. So what's the alternative and what's going on? I actually think, well, it's probably one of the best times ever for employees to join Hippo when the stock is so low, because it's all upside from here. And this is a company that is doing very, very well and progressing very, very nicely.
I love your positive take on it, Assaf, because obviously there are plenty of people out there who would take a somewhat different take on the situation, and maybe it would have been better not to IPO because then investors wouldn't have been so annoyed if people kind of came in, retail investors or institutions who came in at the IPO price. But obviously, I guess that there are positives, there are pros and cons, and also opportunities and risks at the same time. But I know we could spend the whole discussion talking about Hippo, but now I just want to move on to our next bit. So let's now get to know Assaf a little bit better. So Assaf, people get their inspiration from all sorts of places. I know your father was in insurance himself. Do you think consciously or subconsciously that impacted your decision to found an Insurtech, or you were just going to be an entrepreneur and it just happened to be Insurtech right now?
Let's break it into, again, two different components. I think I would have been an entrepreneur regardless of anything. And probably the reason is I'm probably one of the worst employees you can find. And I cannot work for anybody. I get annoyed and agitated from status quo, from not moving fast, from not challenging everything. And so the entrepreneurial aspect, I'm sure it had to do with it was there. This is probably my calling and what I'm set up to do. And probably, I actually think I'm probably a better entrepreneur than a manager in many ways. And for me, entrepreneurship is about getting shit done with limited resources. And this is what I like to do. And it's about moving mountains with what you have and pushing that kind of stuff. So the entrepreneurial bug, I think it's there. Now, the question is, assuming you are an entrepreneur, what field are you going to do? So I dabbled in many different things, and I had an online trading company, and then I had a telco company all over the world, and then I had a physical good, consumer packaged good kind of company, durable packaged good company in the US. And then insurance. So you see, it's all over the place. I think the insurance, yes, there is correlation. I'm sure there's a psychological treatment somewhere out there that would make certain that that's why I chose it. And I'm sure there is something to it. Whatever your parents do, your father does, you want to outdo it and you prove him wrong and all of that, and you can do it better. I'm sure there is this thing, especially as the eldest kid. So you have this chip on your shoulder, which I'm sure is there. But it's also, you get kind of like a view under the kimono of what's going on with insurance. I used to travel with my dad on Jewish New Year's and end off calendars with my dad's the cellular, not the cellular number, the office number on top of it. And that used to be the biggest marketing promotional thing that my dad used to have every year. So, it's and I thought it's the silliest thing ever, and it doesn't make any sense. And, half of his work is not doing anything, and why shouldn't it all move to the internet? And why should people just wait for him to be available in order to change something and wait in line for hours? It was just, the experience I thought was silly. Now, I'm not saying that everything should be in that way, but I think that the underlying assumptions on why Insurtech rise, and I'm happy to keep on discussing it and double clicking on that, is stronger than ever. And seeing how it used to be firsthand, just make you improve your conviction on that point.
Right. And I mean, so many experiences, which can mold us. When it specifically comes to making Hippo a success, what has been the biggest impact for you? Was it your time in the Israeli army? Was it working for McKinsey? Was it the other startups that you founded, not all of which turned out as you would have hoped? Can you kind of hone in on one particular experience that, this was kind of really helped make me most of who I am today to do what I'm doing?
I don't think things in life boils down to one point. And I think there is this amazing speech that Steve Jobs is giving in Stanford graduation, and in it he basically says you can only connect the dots in hindsight. And it's sporadic moments of I think everything contributed, and everything was probably also a hindering component, but you surpass it. I think this probably couldn't have been my first startup. It's so complex, and you need to be with a certain level of maturity and understanding in order to get it off the ground. There's so many external forces that has to do with launching an insurance company. You have reinsurers, you have regulators. At the beginning, you have fronting entities, you have investors. That it wasn't Insurtech when we started. So it was like everything was against us. They were like, listen, it doesn't make any sense. Insurance is never a VC backable business. So I think maturity, which is a combination of all of the things, the military give you resilience and planning. The McKinsey thing give you the conviction on understanding the market and where it's going to go and get some credibility. The fact that it's not my first startup, I probably made less of the silly mistakes that I did with the other companies, the ability to attract talent, the focus, the areas, and God knows a lot of luck and timing as well, which was probably also helpful.
Right, and if anyone watching wants to know like how one of Assaf's startups came a cropper thanks to Apple at one point in time, you'll have to listen to the podcast we did on the Paris Fintech Forum platform last year. But Assaf, look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Hippo co-founder and CEO Assaf Wand. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, now Assaf, let's talk about the future of finance. Okay, so we talked a bit about the timing of Hippo's IPO. There are many fintechs and other startups for that matter who weren't able to get their IPOs away, some of whom may now be running out of cash. Should we expect a raft of mergers and acquisitions for the lucky ones and perhaps collapse for the rest?
Yes, I think so. I think there's going to be a mixed bag. I think people that didn't hit any real product market fit, or that the unit economics are non-sustainable, then they would probably be acquired not on the high side, or they're going to be shut off because the market is less frothy than it used to be. People that actually build something substantial with a lot of value, I think they're actually going to do very well. So it might be that the next funding round is going to be a flat round, maybe even a down round, but it doesn't mean that the company is going to dissolve. It actually means that the company over time is actually going to do better. I think scarcity of capital and stuff like that actually make the company more resilient and better. And good companies would come up with more innovation, more effectiveness, more automation, more of the things that would actually make them more resilient on scale. And then I think people that are actually doing quite well, regardless of what the share price and all of that kind of stuff, and can sustain that time, can actually acquire a couple of teams into it, build more capabilities, and come out of this cycle way stronger and ahead, because a lot of the competition, people that we used to see in the rear window, are actually going to be gone. So I think that's basically what's going to that's short term. That's what's going to happen to fintech in general. And it's, by the way, what I'm saying is basically true to almost every other industry. That's just the status quo of where you're stuck in this glut of funding as well as how much traction you have. But I'm macro and long term, I'm actually more optimistic than ever about the future of fintech, for instance. And the main question that I'm basically asking myself is, I would ask you, Elliott, do you think that in 10 years, you're going to keep on consuming insurance services exactly as you used to consume them 20 years ago? And I have zero doubt that it's just not going to be the case. So it doesn't matter what's going on right now in the market, and it might take 7 years or 12 years, but I have zero question and doubt that the leaders in the market in 10, 15 years are not going to be people that are just using agents that are, their average age of agent is 61, so they're just retiring. Customers want a very different experience. They're all basically set on ancient technology and they can't really innovate. There's more and more data sources. The entire force is so much stronger and the experiences are going to change. So the fact that something right now is in a certain clue doesn't mean that that's what's going to happen. It happened in 2001 and everybody thought that the internet is dead. So what, has the internet died? No, the internet is changed and it's shifted and fine-tuned, but you have a lot more people that are actually buying now. Compare the amount of people that used to buy via e-commerce in 2000 or in 1999 or 2001, where everybody said, okay, e-commerce is dead. It was a ridiculous kind of episode, to what's going on now. It doesn't mean anything. Amazon went from like $60 to less than $3, and they're doing quite well with their share now. So it doesn't mean that something is dead just because the market is the market, but forces and innovation are way stronger than all of that.
Right. I must hold my hand up and say I managed to buy Amazon at $10, but after they rose to $16, I thought that was a bit too heady a valuation, so I sold. Look, I mean, looking on the macro side of things, before Russia invaded Ukraine, investors seemed most concerned with rising inflation and interest rates. There are now, thanks to those elements and also because of the invasion and China's lockdowns and the like, there are growing fears of recession. Does that keep you up at night? What keeps you up at night, Assaf?
It keeps me up at less. So insurance is relatively detached from inflation and stuff like that, and then from recession, not from inflation. What I mean is that usually most insurance companies, their beta is close to zero. You're still going to have the same amount of homes, or almost the same amount of purchases even of homes, which is not even material for any changes. We're a lot more exposed to weather than we are to inflation. We're a lot more exposed to other areas. So insurance is more of an insular thing from recession. It's a lot more recession proof than other areas. It doesn't grow very, very fast when everything is doing very, very well as well. So it's not super exposed to that. It's but it's a feeling. It's an overall. You don't live in a silo. You live in a part of a context and an economy, and you have employees and you have customers. And when it's recession, they're a lot more annoyed. They're a lot more angry, and we need to take care of our customers. So I don't like the situation, but I think compared to other areas in the market, insurance is quite insular from recession.
Okay, and I guess as they say, after the mortgage or the rent, the second check that people tend to write is the one for insurance. So I guess you're also a bit more insulated in that respect. You're of course an Israeli founder. Your Hippo is based in the United States. You've also founded companies in the past in the US and in Israel. How do the two experiences compare?
Wow, I think it's a broad question.
You've got 1 minute for your answer, though.
So the truth is, I think the Israeli environment has matured significantly. There used to be a way bigger, I would say, chasm between the Israeli market of entrepreneurs and what's the global market of entrepreneurs. But it shifted significantly. What people thrive to actually build. It used to be that you're an Israeli, you're building a company to be sold, and now it's very, very different. You have massive companies that are actually listed and playing in the global kind of arena. The second thing, people said you can't do direct to consumer from Israel because you don't know the customer and it's a different market. But some amazing Israeli companies are direct to consumer and are set in here. So this chasm has shifted significantly. The level of talent has improved. The amount of capital in basically leading investor that is in Israel has improved significantly. So I do think still that probably the best place to build a technology company on scale is still Silicon Valley, but that bar or this gap has shrunk significantly from what it used to be before.
Okay. So look, Assaf, time if you're wondering why I'm looking down, it's because I'm setting my timer. It's because it's time now for our rapid fire round of questions. You can just give me, and I would ask for just one word answers wherever possible. Are you ready?
As much as I will be.
Okay, so I'm starting my timer, and away we go. Most successful B2C fintechs or insurtechs we know are very well funded, but are still losing money hand over fist. Is this normal or something we should worry about?
In between.
What fintech segment besides yours has the biggest potential over the next 5 years?
Payments.
What is the biggest pain point in your everyday financial life you would like to see resolved?
Clarity.
Are we at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
No.
Have EU-US regulations kept pace with the new possibilities and behaviors we're seeing in the financial industry?
No.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future that we shouldn't miss out on?
An interesting concept.
Have you ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Less.
On a scale of 1 to 10, 10 the highest, 1 the lowest, how likely are the following to happen in the next 10 years? One of the neobanks will be as profitable as a top-tier legacy bank.
10.
CBDCs become a mainstream reality in the US or EU and not just in China?
CBDCs, sorry?
Central bank digital currencies, will they become a mainstream reality in the EU and US?
Depends on the timeline, but probably at a certain point.
So between 1 and 10?
6.
6. Okay. So we've run out of time on the rapid fire round of questions, Assaf, and that is overall, I'm afraid, all we have time for. So I really just want to thank you, Hippo Insurance co-founder and CEO Assaf Wand, for taking the time to join me today.
Thank you, Elliott. Always fun and enticing discussion.
Absolutely. And one of these fine days we'll find ourselves in the same room in person. But for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.